So hi guys, welcome to our channel, and in this video we are going to talk about the concept of support and resistance. So we are going to always have a program. Actually, it's not really a program. Instead, we'll actually teach you some of the concepts that we do use in analyzing the markets. So we did an article last week talking about a basic introduction to what support and resistance is, and now I'll just do a video illustrating this further. Because also on the ebook, some of the concepts that we have covered on the ebook, we'll do videos so that you can be able to read the ebook and at the same time watch the videos. So concurrently, when you do that, you'll be able to understand the markets better, and you'll also be able to have a feel for the markets. So today we are going to start off with the first concept that we've covered on the ebook, which is key levels, support and resistance. And I'm going to show you how to plot support and resistance and how to draw them on the charts. And so it will be interesting for you to go through the journey, understand what's important in marking of these levels and why it's important to use them in the markets. And that will be it, just a basic introduction into how you plot these levels. Then you'll do practice at home, and once you do practice, you'll definitely see some improvement and some change into how you trade the markets. So that's all from us guys, and hope you'll enjoy the video. And now let's go straight into what you're talking about. So yeah guys, we're down to it, and we're going to start off first by defining support and resistance. For those who don't know what support and resistance is, then we'll go down to the charts and show you how to draw support and resistance. But first, let's start by defining it. So if you look at what I have, so we can define support can be easily defined as a point where a bear market has stopped and bounced higher, meaning it's where demand comes in the markets after supply has come in. So using the concept of supply and demand, you can be able to understand that when supply is higher than demand, definitely prices will go low, and when demand is higher than supply, then prices will go up. So in the case of supply overwhelming demand and the prices are going low, then we get to a level where demand is coming in. That level where demand is coming into the market can be defined as a support point, and that's why we say support can be easily defined as a point where a bear market has stopped and bounced higher. For those who don't know what a bear market is a market that is moving lower. So we are simply losing value. If gold, for example, was trading at 1360 and we move lower to 1300, then that can be defined as a bear market. Resistance, on the other hand, can be defined as a point where a bull market has stopped and moved higher, not lower actually, and moved lower. Yeah, that's it. That's the point. So when the market is moving upwards, or when we have a bullish move is when the market is moving upwards, which is what normally happens and what most people are aware of in the markets. Then when it gets to a level and supply is coming in at that point, or most people are selling their positions and getting out, then we'll have the markets moving lower, and that level can be defined as support and resistance. So if you use an example of an illustration, this picture can serve as an illustration. So when the markets are moving upwards, as you can see, we get to a resistance level. Supply comes in at this point and the markets end up moving lower. And as the markets are moving lower, these are called corrections, because when the markets are moving from one level to another, they don't do so in a straight line. We'll definitely get these corrections for us to get better levels of entry. So you can see that this was a good resistance point. And as we were moving lower, we came into a point and demand started coming in again. And this level now is called support. So this level where demand was coming in can be defined as support. So when we are trading the markets, we try and sell at the resistance levels, and we also try and time to buy at the support levels. That's not basically what happens like 100% of the times, but most of the times we're trying to get in at these levels while you're buying, and we are trying to sell at these levels, and that's how you are able to ensure that you get good trades and you're able to make money during this up move, and if you're selling, make money during this down leg. So that is generally or basically what is support and resistance. And the last thing that I'll maybe talk about before going to the chart breakdowns is the polarity change. So when one level is broken, because it definitely happens in the market. So for example, when we had this move upwards, we came into this resistance point, and after this point was acting as resistance, the markets moved lower, correcting. Again, at this point, we found support, and after this, the bulls took over, and now we created new highs, breaking past this resistance. So after the markets have broken past a resistance level, then you can expect a move to touch the new resistance level, but you can see immediately the markets come back. The initial resistance level now converts into support. So it's it's called polarity change, whereby support turns into resistance and resistance turns into support. And that's basically what happens in the markets. And I'll go down to the chart breakdowns and I'll show you examples of this happening. And so you can be able to use the strategy of look left structure leads clue, because for example, if you never had this level, you will be able to go back and find this level, plot it, and when the markets are coming back down, you could be able to expect demand coming in. So if you sold at this level, then you could be able to exit at this mark, and you could have been able to make money. So I'll just go down straight to the chart breakdowns and show you how to plot these levels and how you use them in the markets. So this is the daily chart of Euro USD, and I'm going to use it to show you an example of how we mark support and resistance. Then maybe I can go down to the lower time frames and show you how you are able to remain with support and resistance. So support and resistance, as I've earlier indicated, to use a point whereby supply or demand is coming into the markets depending on the trend. So for example, if we start off from this point, you can be able to get that we had these levels coming in at that mark. So maybe I can change this color so that you guys will be able to see. Perhaps I can use not really blue. Let's try green. Okay, green is perfect, and I can make it heavier so that you guys will be able to see. So yeah, you can again correct this to be maybe 1 point. Okay, let's just plot it to this level. Then you can clone it again to this level. So you get that this was the resistance point, and now the lower level turns into the support. So this is when the markets are moving upwards, they came into this resistance up here at around 1.25 mark, and then we had this correction coming in. It was supported by this level. We had a move back upwards. We came back lower. We were supported again by this level. We came back higher. We tried to break past this level again, and we still were not able to go past that. We came higher, and finally we had a break. And you can see how after the break, the markets really moved lower. So this was a breakout trade. There are some people who prefer to trade breakouts, and you'll find that such people will execute their positions after such a level has been broken. So you'll find someone coming in at this level and perhaps riding the markets till that point, or other people will tend to use these rejections, and you'll get that perhaps before we have this move lower, you could perhaps come in at this point after such a candle, and you get this bullish move to this point with your stops placed just below this level. With your stop coming in at this level, this is the risk reward tool. I'm only trying to show you the entry levels into the market. Again, you can be able to move lower, and as the markets are moving lower, let's try and see if we could be able to get this level. So using the look left structure leads clue, meaning you try and move your charts to the left and look at history. So we are trying to see what happened in the past and what that means to the current price action. So you can see we had this level at that mark, the 1.207 mark, and the markets rejected this level this time, and again this time we had a rejection of this level, and you can see that immediately the market spiked that zone, and we had a shooting star candle, implying a hammer at this point, implying that perhaps demand will be coming back in, but instead we got supply pushing the markets lower. Again, you can check this level, you can move this to that point, and if you move it to this point, you can see this level, which I can perhaps highlight using that. So we have this one level, and again I can clone it to be the second point, which is this one. So you have two levels which are broken, and if you go back, you can see that the markets took out this level but came back for a retest before moving lower. So using the look left structure leads clue, I can be able to plot levels, and so I can just move my charts to the left, look for where the markets were initially rejected, so I can mark them, then go back into the future and try and see how the markets reacted to this level. So for example, I've plotted this. You can see we have one time, we have the second time, we had the third time the markets coming into that zone. And what happened in the future? We took out this level but came back again. Look at this one time, the same zone two times. So we respected it again, came back lower, we went back higher, again we respected this level, came back lower, we went higher, and finally we took out this level, and now we moved lower. So yeah guys, as you can see now, by using the look left structure leads clue, you can be able to get most of these levels. So again, we can clone this and bring it back lower, and you can see that if we just used this, we could be able to anticipate the markets rejecting this level one time. Again, we tried rejecting, we tried breaking past that, but this was a false breakout, so we came back lower, and we tried again, but we were sent lower, and the markets have been lower this level ever since. Again, we can plot it and we get where the markets are bouncing. So if we bring it back to this point, you get that the markets are bouncing between these two levels. So you can see we had this bounce at this level, sending this pair lower, trying to break past this mark, but it was more of a false breakout, because immediately after the breakout the markets came back higher. Again, we tried going lower, and this level again acting as a good level with the bullish engulfing candle, engulfing 1-2 candles, and the markets are now back up again, trying to go lower, and still the markets are unable to move below the 1300 mark. So this is something that is really helpful, and the goal of every trader is to buy at this mark and to sell at this high point, because that's how you're able to avoid being stopped out by the markets, and that's you're able to generate high probability trade ideas. We also use other tools, but for now I was only showing you how we mark support and resistance and how they're important to us. So this is the first thing that you do. You try and get the major levels, or rather you get the levels which are really important on the daily chart. And as you can see, I've gotten this level, I've gotten this level, but in between these two levels you also have some levels which are crucial when you're trading on the lower time frames. And so I can click on the 4-hour chart. Okay, so you can see that on this chart we have two levels already coming in, and if we go back again using history, you can be able to spot that the level was not only rejected one time, it was also rejected the second time, the third time. But in between these two levels you can be able to spot some other levels which are also being respected by the market and can be able to be used while trading the market. So for example, if we try and bring in this tool again, our tool for marking the levels, and plot it at this point, we have that level which was rejected one time, sending the markets lower. We also had this time, this was more of a false breakout, sending the markets lower again, but this time we took out that level, again the markets were sent lower, coming back for a retest and moving lower. The markets again tried to go past this level, acting as a good resistance point. The markets moving lower, again being supported by this level. We went back higher and we tried moving lower, but now it's like we are forming a new level again. So you can be able to refine this level, still you get the level which the market is currently respecting, and that's why it's very important for you to constantly check whether the markets are respecting your levels and to refine your levels as you're trading. It's very hard for you to get all these levels initially right, because the markets will also change with time, meaning perhaps this level will be respected at a certain time, then the next time it won't be respected, then the markets will respect another level. And so your primary job as a trader is to make sure that you refine the levels to get the current level which is important for you. So for example, currently you can see that the euro is trading at the 1280 mark after breaking past this level which was respected. We came back higher, but again we took out the level yesterday. And so the most important level currently is plotting it and getting this level which is respected one time, has been respected this time, and the markets moved lower, trying to go back higher again. We were rejected by that mark. We tried to go higher, but this time took it out, and it seems like the markets were going back to retest it, but we never got there, and the markets were sent lower. So this is an example of how by plotting support and resistance, the two major levels, then you can be able to plot the other levels with time. So for example, if the markets come back and break past this level, so let's say we come and we take out this level, then your job is to make sure that you bring this level and to bring it back to this mark. So you expect that the markets may perhaps get in some supply coming in at that mark, and if the markets get to this point and perhaps they give you a short signal, then you can be able to go in short and ride this, because that will be a good execution point and that will be a good level of entry. And that's basically how we use support and resistance. That's how basically we mark it. So as you mark your levels, make sure to go back in history and look at how the levels are respected. For example, like for this level, you can see it was respected one time at this level, we were respected again this time. So it's a good level which has been respected multiple times, and that makes it more reliable and a better area and a better zone for you executing your position. So that's all from us, guys, on the concept of support and resistance. This was basically an introduction video. There is a formula that you do use in plotting these levels, but I'm not going to share with you that formula. That will be on the course. For those who will be purchasing the course, you'll be able to get an in-depth analysis and an in-depth look to some of the strategies that you do use in plotting our levels. So that's all from us on the concept of support and resistance. More about this will definitely be on our course. For those who will be purchasing the course, you'll be lucky to get it. And hope you guys will practice this concept, and hope you guys will tune in and subscribe for more content to be coming up and for more technical concepts which we'll be breaking down for you. So cheers, guys.
So once again, to all Financial Hub traders, thank you for watching our videos to the end. And just as a bonus, in our course, our upcoming course that we'll be releasing soon, we have an in-depth way that we explain how to get the support and resistance levels. As you've seen, Ken has just shown an overview, look left structure leads clue perspective, which is not as deep and as profound as we have discovered along the way in our trading journey. We found ways that some support and resistance levels, they're easily broken, and some are retested and the market bounces off these levels. As you can see around this level, it was a beautiful resistance level, but this market spiked up above and came back below it. So we have a perspective that we've shown in our course and showing you how to really get and keep adjusting and being flexible on our resistance levels and support levels. So apart from that, we don't have much to say, but wait for our course that is coming out soon. So let me get back into my trading, guys.